G'day from a very wet Melbourne morning where the trams are delayed and the Bitcoin charts are doing the same thing, sliding hard. I'm Sash from Cryptologic, and if you're watching this right now, chances are your portfolio just took a hit that feels heavier than a wet wool coat on Berg Street. Bitcoin has officially plunged below 63,000 USD, and here in AUD, that's sitting at around roughly 89,500. Today, we're doing a full comprehensive breakdown, the local Australian regulatory moves that could actually protect us, the three massive global stories driving this sell-off, and my no BS market analysis on whether this is a generational buying opportunity or something to sit on the sidelines for. Stick around. This one's packed with actionable insights you won't get from the big overseas channels. Yeah, okay. This segment is brought to you by Cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news, tax guides, and Melbourne meetup alerts. Let's start with what's happening right here at home, because for once, Australia isn't just following the US, we're actually getting ahead of the curve. Excuse me. According to the latest ASIC Key Issues Outlook 2026 and the Corporations Amendment Digital Assets Framework Bill that was introduced late 2025, we're on track for proper, fit-for-purpose rules around digital assets this year. Key points for Aussie investors: stablecoin issuers will need an AFSL and reserve requirements, meaning less Wild West, more consumer protection. Clearer licensing pathways for exchanges and custody providers operating in Melbourne, Sydney, and Brisbane. Tokenization of real-world assets is getting the green light. Think fractional ownership of Melbourne property or even Victorian government bonds on chain. Digital X, one of our own listed crypto firms, just announced they are deploying 30 million into the market as valuations reset, converting BTC holdings into liquidity to buy the dip. That's the kind of local confidence I'd love to see. Why does this matter to you in Melbourne? Because when global prices crash, clear local rules mean our super funds and SMSFs can actually allocate safely. No more guessing whether your BTC ETF exposure is compliant. This framework positions Australia as a digital asset hub in the Asia Pacific, and that's huge for jobs, innovations, and yes, your portfolio long term. I'll be dropping a full written guide on cryptologic.com.au this week, walking through exactly what the new bill means for everyday holders. Link in the description. Now, let's zoom out. Three big global stories are smashing Bitcoin right now. Story one: tariff turmoil. President Trump's latest tariff announcements. First 10%, then hiked to 15%, using emergency powers, have spooked every risk asset on the planet. Bitcoin fell as low as 62,852 USD overnight, according to Bloomberg. That's a 19% plus drop for the month of February alone, the worst monthly performance since the June 2022 crypto winter. Geopolitical tensions plus macro uncertainty equals investors running to cash and gold. Story 2, Bitcoin ETF bloodbath. US spot Bitcoin ETFs have bled roughly 4.3 to 4.5 billion in the past 5 weeks. Hedge funds slashed their exposure by 28% in Q4 2025 alone, with some big names cutting up to 86%. BlackRock's IBIT and Fidelity's FBTC led the outflows. This is the longest streak of outflows since the ETFs launched. Institutions that piled in during 2024-2025 are de-risking hard. Now, story 3, price discovery shifting to Chicago. Here's the fascinating part. Even as spot prices tank, Bitcoin's real price discovery is moving to the CME in Chicago. 24/7 futures and options trading is coming early 2026, and regulated venues are now setting global benchmarks more than offshore exchanges. Lightning Network still hit a record 1 billion plus in monthly volume despite the price slump. Real usage is growing underneath that noise. 3 stories, 1 theme. This sell-off is driven by macro and institutional positioning, not fundamentals collapsing. So what does this mean technically and on-chain? Bitcoin is now down roughly 45 to 50% from its November 2025 peak above 126 USD. We're testing major support zones that held in previous cycles. On-chain data shows while selling has increased, but accumulation by long-term holders continues. For Australian viewers, the AUD has been relatively resilient, so your 89,500 AUD price feels a little less painful than the USD chart, but the correlation is still 0.9 plus. When Wall Street sneezes, Independent Reserve and Swyftx catch the cold. The big difference this cycle? Institutions are already in the game. Even with outflows, Bitcoin ETFs still hold over 100 billion AUM. BlackRock's tokenizing funds are moving on-chain. This isn't 2022 where everything was retail driven. My analysis? This feels like a healthy, if painful, correction inside a longer term bull market. The halving cycle still has legs, and Australia's regulatory clarity is arriving at exactly the right time. All right, time for a proper Melbourne style breather after all that red. Why did the Bitcoin holder in Fitzroy refuse to sell during this February crash? Because he looked at the tariff headlines, looked at his flat white, and said, mate, I've survived Melbourne winters and 2022. This is just a tariff speed bump on the way to new all-time highs. Time for the Cryptologic takeaway. Here is the clear expert synthesis. This February 2026 dip is painful, no doubt, but it's a macro-driven correction, not a crypto winter 2.0. Australia's digital assets framework and stablecoin rules are landing at the perfect moment to give local investors confidence and protection that many other countries still lack. Institutions are rotating, not running away forever. On-chain metrics and Lightning usage prove real adoption continues. I am not a financial advisor. This is not a financial advice. Always do your own research and only invest what you can afford to lose. For you in Melbourne or anywhere in Australia, consider dollar cost averaging on local exchanges to avoid FX fees. Look at how the new regs will make custody and staking safer. Bookmark cryptologic.com.au for the full written regulatory breakdown dropping this week. If you've been waiting for a better entry, this could be it. But size responsibly. Final call to action. If this video helped you make sense of the chaos, smash that like button, subscribe, and turn on notifications. We drop these deep dives every week from right here in Melbourne and maybe somewhere else in Australia. Depends. Drop your biggest question in the comments. Will Australia become the crypto capital of Asia Pacific? Are you buying this dip? I read every single one. Head to cryptologic.com.au for the free Aussie tax guide and event calendar. Until next time, stay safe, stay informed, and remember, in crypto and in Melbourne, the sun always comes out after the rain. I'm Sash from Cryptologic. Catch you in the blockchain.